With the CPI falling to 2.5%, yields dropping, and the labor market falling apart as more layoffs drive fear on Main Street, we are poised for a liquidity tsunami. The conditions are ripe for Jerome Powell and the Fed to cut rates in a major way. So the question is for you, are you prepared for the digital gold rush? What's up, everybody? Welcome to Bitcoin Simply with Dante Cook. Great news. I'm going to be back posting more than 2 times a week, it looks like, maybe daily. We'll see. So if you haven't already done so, smash that subscribe button. I can't wait to be back helping more people understand the macro landscape in Bitcoin in a way that's simple and consumable. And with that, let's get into the episode. After getting absolutely destroyed on Sunday, it's reported that you can now buy 2 tickets for the Carolina Panthers games for just $1.80. It's like the value of worthless things are starting to be priced correctly, like JP Morgan and Bank of America stocks, which are both off by more than 5% this week. Both stock charts look like sketches for your favorite roller coaster ride. The market continues to be incredibly volatile, and it's because there are less humans involved in the market. And the numbers that actually drive the trading algorithms in the market are all driven by numbers that are fabricated out of thin air. None of these numbers are actually believable when you even look at them. But with so much data and so much manipulation, you can massage any amount of data to prove any story or any point that you want. Like the latest CPI numbers that came out. No one in the real world thinks that CPI is actually at 2.5%, especially when you have real world necessities like electricity up 3.9%, food away from home up 4%, car repairs up 4.1%, homeowners inflation up 5%, hospital services up 5.8%, transportation up 7.9%, and car insurance up 16.5%. And more people on Main Street, like small businesses, are feeling the crunch. 37% of small businesses in America reported lower earnings this past 3 months than the previous 3 months. It's clear that the labor market and the market on Main Street in the real economy is starting to slow down. There are 33 million small businesses in the United States. They make up 44% of our GDP. They employ 61 million people and make up 47% of our private sector. So what will Jerome Powell and the Fed do? Well, sources like the Citigroup say that they're going to cut rates by 1.25% this year. But how do you contrast that with prediction markets, which say the likelihood of the Fed cutting in September falling to just 8%? So that means there's going to be a lot of cutting from October through the end of the year, which seems unlikely if we're going to get to that 1.25% number. Jerome Powell has 2 choices he can make. He can cut rates in this weak economy that seems like it's already in recession and risk driving this sticky inflation through the roof. But it will stimulate the economy in the short term. Or he can make the decision of doing nothing, waiting too long like the Fed has done in the past. And this recession could turn into some sort of depression. And this also puts the Fed's mandate at risk, which is price stability and job employment. Neither option is a good one. And in order to beat the cost of inflation or monetary inflation, the average consumer isn't left with many choices either. This is what Michael Saylor describes as the investor's dilemma. The hurdle rate for actually beating monetary inflation in our current regime is about 13 to 14% a year, which there's only 1 or 2 asset classes that have the opportunity to beat that rate. So what Michael Saylor is saying is that if the money supply increases by 10 to 13% a year, if the real assets that you own are going up by that same percent, you may be getting richer on paper, but in reality, you're not getting richer at all. You're being diluted at the same rate that your value is going up. But he also describes another option, Bitcoin, the digital gold rush, and why we're entering into a new era that if you're smart and you can capitalize on it, you'll be rich like the oil barons were in the early 1900s. Michael Saylor released a presentation that he gave to investors talking about institutional adoption of Bitcoin, which in my opinion is by far his most succinct, clear, and impactful presentation and speech that he's ever given. And it seems like the guy just keeps getting better and better and better. Michael Saylor says that the harnessing and the transformation of energy into products like oil or standard oil is what created the majority of the wealth in the last century. John D. Rockefeller is responsible for the wealth creation of more wealth than any person that we've seen in the modern era. Well, in the 21st century, he argues that there's this other guy who's able to harness and transform digital energy into a usable commodity. That guy or gal is Satoshi Nakamoto. Saylor argues that this is going to create the wealthiest people in the 21st century, the digital century. Bitcoin offers many advantages that physical assets can't compete with. We get the benefits without the liabilities. No tenants, no taxes, no weather, no acts of God, no political leadership changing in such a way that would threaten our asset. What we get is indestructible, incorruptible, teleportable, fungible, divisible, perfect money for the 21st century. It's clear that Bitcoin outperforms every other asset if and when liquidity flows into the market. He describes Bitcoin as a new hurdle rate. Its rate of return over the last 4 years has been 46%, compared to other asset classes or assets like the Magnificent Seven, which have only returned 24%. And if you look at this research from Fidelity, it also sets the standard by being the best risk-adjusted asset, by having the highest Sharpe ratio. That is also not as highly correlated with the S&P 500 as other assets. So you get a non-correlated 46% hurdle rate, rate of return that is the best risk-adjusted play that you can make. And this is especially critical in the era that we're moving into right now, because the Magnificent Seven dominate the returns of the S&P 500. They make up, on any given day, 60 to 75% of the weighting of all of the assets in the S&P 500. So they are the tail that's wagging the dog. Michael Saylor goes on to say that because of all of the different milestones and the hurdles that Bitcoin has gone through to get to this point, it is unlikely, or there's a very low risk, that this asset or this asset class goes to zero. We've progressed from the Immaculate Conception in 2008 to the IRS declaring it as property in 2014 to the block size wars in 2017, all the way through to the 2017 and 2018 era, where institutions like Fidelity made it okay for institutions to look at and do research on this asset class, to 2020, where public companies like MicroStrategy, Tesla, Square, and other public miners have taken Bitcoin from just a nascent asset class to an asset that is being held and earned by publicly traded entities, giving it legitimacy in a way that they couldn't before. And we all know what happened this year, January of 2024, where the ETFs were approved, and they had the greatest success of any ETF product and product launch in Wall Street history by firms like BlackRock and Fidelity and Franklin Templeton and ARK and Bitwise. All of these legitimate asset managers are now claiming that Bitcoin is an investable asset class, not just for the everyday person, but for the institution. Now we have presidential candidates talking about Bitcoin from the stage. And in 2025, we're going to have the fair accounting or FASB rules applied so that more people can hold Bitcoin on their balance sheet. But here's the most important thing that Saylor said in his speech.
Today, there's 19.7 million Bitcoin. In 2034, there'll be 20.8 million Bitcoin. You've got 10 years. That's the gold rush. We're headed toward a point when 99% of all the Bitcoin is mined. That's the point of absolute scarcity. The last 200,000 Bitcoin come out over 106 years. What does that mean? There's going to be reflexive price shock at 0.99. At 0.99, and you've only got 3,759 days, that's all you have. There's only 1,145,000 Bitcoin for sale. At today's price, it's $74 billion. MicroStrategy will buy $5 billion of Bitcoin in 1 year. This is not a lot. This is a trivial amount. The price cannot stay at this level. That's $20 million a day. We announced a $2 billion equity offering. We raised $2.4 billion in the first 6 months of this year. Look at those numbers. It's not that much. This is a phenomenon. After 0.99, Bitcoin creation is offset by lost Bitcoin. The supply is effectively fixed. It's the inflection point where Bitcoin becomes the world's first deflationary asset. There's never been anything like it, right? It's more scarce than land in Manhattan. It's more scarce than anything you can name, anything you've ever invented. The fact is, no one's ever seen this before. Therefore, you can't compare it to anything. It becomes the world's first perfect money.
At the moment when we hit 0.99 or The moment when Michael Saylor says that 20.8 million Bitcoin are in circulation, are you going to be one of those people that heard about the digital gold rush and took advantage? Or you're going to be one of the people that heard about the digital gold rush but didn't act until it's too late? Or you're going to be one of the people that heard about the digital gold rush and dismissed it altogether?
I actually see a base case, which is Bitcoin grows from 0.1% of the assets to 7% of the assets of the world. A 29% ARR. Eventually, we're at $13 million per Bitcoin.
Michael Saylor predicts that Bitcoin will go from 0.1% of the world's capital to 7% of the world's capital. We are living in the digital transformation of capital and economic energy itself. Are you ready for the digital gold rush? If not, I suggest you get started on your journey because it takes time. It takes putting in the work. If you only put in a little bit of work, Michael Saylor says that you'll be a skeptic just like he was in 2013. But over time, you'll begin to understand that Bitcoin is a legitimate asset and it does represent the greatest investing opportunity moving forward in the digital future that we're barreling towards. If you're interested in starting your journey and don't know where to begin, head over to joincolumbus.com to learn more about this online Bitcoin community to help you navigate your journey. We'll be launching soon, and I'm excited to play a small role in helping you navigate your Bitcoin journey. Don't do it alone. And with that, we're signing off for today. This is Dante Cook with Bitcoin Simply. Happy stacking.